Oil price has been down since the start of the week. Today is Tuesday, but of course the market's now turning north after the International Energy Agency says the growth in the market will be around 1.2% for the 2016 year, and says the surprise increase in Iran's oil output could hurt prices further. Let's bring in Desola Sumanu, who is a research analyst at Financial Derivatives Company, FDC, sitting down here in Lagos via Skype. Let's talk to Desola for about 2 minutes. Desola, thank you very much for finding time to be with us. I'm sure you're reading the IEA report and how the market is reacting to that as we speak. Talk to us.
The IEA report suggested that in January, the market was oversupplied, or OPEC increased production by about 1.7 million barrels. So the increase in the oil price from about $20 to about $30 was as a result of certain factors. One is the weakening dollar. Two is the expectation that shale was going to slow down. Shale production was going to slow down. The third was because of the prospects that OPEC and non-OPEC producers were going to agree to cut down price, but we don't see any of this happening. So, in my opinion, I think that the increase in oil prices is just fleeting. It's not going to stay. It's going to go back down.
Do you agree? Therefore, there's another report about an hour or two ago from Goldman Sachs saying that oil could go below $20 a barrel. Looks like Goldman Sachs is sticking to the $20 story. This is not the first report. This is the second.
I think that is a very bearish position. Oil would go low, but I do not think it would go as low as $20 per barrel. Even Barron's projected the same thing, that it would go as low as $20 per barrel in the first half of 2016, but it will rebound to about $55 per barrel towards the end of the year. I don't think that is likely, but we are preparing for we are hoping for the best and we are preparing for the worst. So.
Okay, so we just put on our life jacket. That's what it means, just in case.
Yes.
Just in case we need it. Thank you, Desola Sumanu, an analyst with Financial Derivatives Company, investment and research firm sitting here in Lagos. So let's wrap up with South Africa, where the third installment of the country's Menswear Fashion Week took place in Cape Town, showcasing designs from contemporary designers amidst the gloom of the falling currency, the rand, and the state of Africa's most advanced economy. Backstage at this year's South Africa's Menswear Fashion Week is a flurry of activities as models get their makeup done and designers put their final touches to their collections. Watch this.
Zukisi Mbani is giving his clothes one last look before the models take to the catwalk. Zukisi is a Cape Town-based designer famous for his gender-bending collections. But things have been tough recently for the young designer as South Africa struggles to steel itself against a weakening economy. The country's currency, the rand, has fallen more than 7% since the start of 2016, adding to a 25% decline last year.
I think it affects us a lot, especially me, because I've recently opened myself up to doing business with other countries. So with the rand being lower, everything is kind of expensive, and life, even traveling to those countries, it's kind of tricky now because the rand is very weak. So it's affected it negatively.
As South Africa's economy slows down, Zukisi has set his sights on a bigger market, targeting customers across the continent.
I started with doing Ghana. I did Nigeria, so I'm looking into going to Kenya. Yeah, the idea is that the brand needs to be identified as a household brand in Africa before I can go over to the other side.
The lucrative fashion industry is worth more than 200 billion rand, and that's about $15 billion. Local designers are trying to encourage South Africans to buy local designs by adopting more competitive pricing and creating quality products.
It can get a little bit challenging, but I think, for us local designers, is we're really trying to push for people to shop local, because I think also we deliver products that are of a high quality, and then we bring down the prices. Well, the prices are a lot less than what you would pay for an international brand.
The strategy seems to be working. Fashion buyers, the Button brothers, Palmer and Marvin, who are based in Australia, say they are impressed by the cutting-edge and high-end designs they have found in Cape Town. The weak rand has also meant clothes in South Africa are cheaper to buy.
Again, there's different styles we are seeing here that we will get in Australia. And like the Button Brothers always like to push the boundaries. So we're having a definite ball, especially with the strength of the Australian dollar compared to the rand. So it's working out fantastic for us.
Despite problems in the economy, South African designers remain upbeat about the prospects for the fashion industry as they try to find niche markets for local garments.
That's 100% South Africa, proudly Africa. I am Bosin Namofai. I'll see you next time.